Hey guys, welcome to the channel Market Uncharted. Today important video to help understand that if you don't feel comfortable in investing in a particular stock, you don't understand the valuation, you don't know the economic ratios, the financial ratios, you don't know if it's healthy or not, you can always go and invest in ETFs made by companies that did their research and try to provide a really good quality ETF with top holdings that can make you money still. So today my point is I'm trying to show you a few ETFs out there that make sense for an investor to hold if they don't feel comfortable in do their own due diligence and deep dive research to find a company that suits their valuations. So again, why ETFs? Because they provide trading flexibility, portfolio diversification, risk management, low cost, and for many countries such as the US, tax benefits. So we start with a controversial one, the ARK Innovation ETF, ticker ARKK. And why controversial? Because their top holdings are composed by only growth stocks, stocks that maybe one day reach out really, let's say, really good incomes, financial ratios, economic ratios, and for now they are just long-term growth. So this is a highly speculative type of ETF with their top holdings to be Tesla, Teladoc, Roku, and Zoom. So again, be careful with this, and also the expense ratio is slightly above average. But again, this is to invest in disruptive innovation. So it's up to you as an investor to see if this suits your profile. Then you have a conservative one, the Vanguard S&P 500 ETF with ticker VOO. Basically tracks the S&P 500, the 500 largest US companies. So the goal here is just to track the actually US S&P 500 with the expense ratio really low. This is not actively managed such as the ARK Invest ETF. This is just a standard ETF that tracks the S&P 0.03%. On the long run, this could be a really healthy one. You can see here the top holdings: Apple, Microsoft, Amazon, and Facebook. So I think this is a good idea for passive income. Then you have the Invesco QQQ Trust with the ticker QQQ. Again, the expense ratio of 0.20. This is an important ETF, highly focused on the technology companies, again, growth stocks, really the 100 largest domestic and international non-financial companies listed on the Nasdaq stock market based on market capitalization. You can see here the top holdings: Apple, Microsoft, Amazon, Facebook, top growth stocks. Then you have the SCHWAB Dividend ETF, a really low expense ratio as well, 0.06%. This tracks as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 companies. The index focuses also on the quality and sustainability of dividends. So for a type of investor not focused on growth but focused on value and dividends, this is a really important ETF as well, with their top holdings being Home Depot, IBM, Cisco, and BlackRock. Then you have the State Street Global Semiconductor ETF, ticker XSD, expense ratio a little bit above average as well, 0.35%. The ETF invests in companies operating across information technology, semiconductors, and semiconductor equipment. It also invests in growth and value stocks of companies across diversified market capitalization. So overall, this is also a really good ETF because it can pick up a little bit of the both type of stocks, growth and value, and I really love their top holdings, Nvidia. So if you want to still check a few other type of ETFs that can show like the total stock market or the total international markets, you have here three possibilities of the top three in funds: Vanguard, Fidelity, and Charles Schwab. Again, really low expense ratios that can follow the total stock market worldwide. So this is an important one for you to consider as well. High diversification present in these ETFs. And I end up the video with 2 ideas just for you to check. Again, do your own due diligence. This is important as an investor. But I think for the future, video games will be again a really important sector for the community, for the society. And you have an ETF nerd that tracks a few or the few biggest companies in this sector. Crosshair, Activision, Blizzard is their top holding. So do your own due diligence, but here it's a good one as well. And finally, we end up, after seeing Vanguard and Charles Schwab, for example, Fidelity, a new type of fund called Amplify ETFs that really has awesome ETFs as well, more checking the growth side of the markets. But again, important one just here for you to see, they have the cannabis ETF, data sharing ETF, and the online retail ETF, as many others. Go to their website and check it out. So thank you guys so much for watching the video. I hope you like it. Never forget, knowledge is not power, knowledge is potential power. Execution is everything. And just like the markets, we will not rest.